Have you ever wished you could see a market crash before it happens? Or maybe spot a huge rally just as it's getting started? Well, today, we're diving into a tool that's kind of like an X-ray for the market. It lets you look right past the price to see what's really driving the moves. We are talking about on-balance volume.
So here's our game plan. First, we're going to uncover the simple secret that makes volume so darn powerful. Then, we'll decode the OBV line itself. And don't worry, it's way easier than it sounds. After that, we get to the fun part, learning how to spot the 3 key signals that can really give you an edge. And finally, we'll see how you can combine OBV with other tools to trade with more confidence than ever before.
All right, let's jump right into our first section. We're about to uncover the simple but honestly powerful principle that's at the very heart of the OBV indicator.
Okay, so this is the question every single trader asks themselves, right? You see a price shoot up, or maybe it drops like a rock, but is there any real conviction behind that move? Is it for real? The answer, more often than not, isn't in the price itself, it's in the volume that's driving it.
And this is the core idea from a brilliant analyst named Joseph Granville, who figured this all out way back in 1963. See, he realized that the smart money, the big institutions, the pro traders, they can't just sneak in and out of the market. Their moves are too big. They leave footprints. And those footprints show up in the trading volume before they become obvious on the price chart. It's a simple but profound idea. Volume precedes price.
So let's look under the hood. The real genius of OBV is just how simple it is. Let's break down exactly how this powerful indicator gets calculated.
I want you to think of OBV as a running scoreboard for buying versus selling pressure. Every single day, it looks at the closing price, and it asks one simple question. Who won the day? The buyers or the sellers? And then it adds or subtracts that day's entire volume to the scoreboard. So over time, you get this really clear picture of who's actually in control of the market. And the math behind it is so straightforward. It just follows these 3 simple rules. If the price closes higher than yesterday, we call that an up day, and we add all of that day's volume. If it closes lower, well, that's a down day, and we subtract the volume. And if the price doesn't change, then the OBV doesn't change either. Simple as that.
All right, here's a quick little example just to make it crystal clear. So on day 2, the price closed higher at $11. So what do? We add all 1,200 shares of volume to our running total. But then on day 3, the price fell a bit, so we subtract that day's volume of 800, which leaves us with a final OBV of 400. That's all there is to it.
Now, if you've been around the world of trading for a bit, you might be thinking, hey, wait a minute. Isn't this just like the accumulation/distribution line? And you know what? That is a fantastic question, because they both use volume, but they're measuring very, very different things. It's a super common point of confusion, so let's clear it up right now.
Okay, here's the key difference, and it's simpler than it looks on the surface. OBV is like a sledgehammer. It's blunt. It only cares about one thing. Did today's price close higher or lower than yesterday's? Then it adds or subtracts the entire day's volume. The ADL, on the other hand, that's more like a scalpel. It's precise. It looks at where the price closed within today's own trading range to figure out if the day finished strong or weak. So it's trying to capture those more subtle intraday clues.
Okay, let's get into the practical application. Now that we know how OBV is built, we can see how this all comes together to create 3 really powerful signals that you can look for on your charts to understand the market's true conviction.
So the first and probably most common way to use OBV is simply to confirm what you're already seeing on the price chart. When the price is making higher highs and the OBV line is right there with it, also making higher highs, that tells you that strong volume is backing the trend. They're in sync, and that's a huge sign of conviction. But here's where OBV really becomes a superstar. And this is the most powerful signal it can give you. It's called divergence. And this happens when the price and the volume start telling 2 completely different stories, which gives you this incredible early warning that a trend might be about to run out of gas.
So a bullish divergence is when the price hits a new low. But look, the OBV line doesn't. It makes a higher low. That suggests that even though the price is down, the selling pressure is actually drying up. Now on the flip side, you've got bearish divergence, and this is the one that can save you from buying at the absolute top. It happens when the price hits a shiny new high, but the OBV line just can't keep up. It's a huge red flag that the rally is running on fumes.
Check out this classic example. You had a stock making new price highs. Everything looks great. But at the exact same time, its OBV was actually falling and it broke its own support level. So the price chart was screaming, buy, 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 but the volume was quietly whispering, get out.
OBV let you hear that whisper. And sure enough, a little while later, the stock price followed the volume and took a significant dive.
All right, signal number 3 is all about breakouts. You can use OBV to gauge the strength of a potential move. So when a price is pushing up against a key resistance level, you want to look down at your OBV and see a big surge. That surge tells you there's real power, real money behind that move. And this right here gives us a fantastic rule of thumb. A breakout on low volume, that's like trying to launch a rocket with a firecracker. It's just not going to work. But breakouts that are backed by a huge surge in volume, we're talking at least 50% above the recent average, now those have the fuel they need to succeed. It's the difference between a false start and a real launch.
Now, OBV is incredibly powerful. But listen, no single indicator is a crystal ball. It gets even better when you pair it with other common tools. It's all about cross-verifying the signals.
For example, imagine this scenario. Your RSI, your momentum indicator, starts to look weak. It's flashing a potential sell signal and you're tempted to get out. But then you look down at your OBV and it's still climbing strongly. What does that tell you? It says that even though short-term momentum is slowing down, the big money is still buying. And that is a powerful reason to pause and not get shaken out of a good trade too early.
So what does this all actually mean for your trading strategy? Let's bring it all home and talk about how this simple volume indicator can help you with smarter risk management. And this is where OBV really moves from just being an indicator on a chart to being a core part of your risk management. So instead of just setting a stop loss based on price, you can set it based on the conviction and the trend. If the OBV trend line breaks, it means the fuel's running out, and it might be time to get out, even if the price hasn't dropped yet. It can also help you decide how much skin to put in the game. You see strong, confirming volume? Maybe that's a reason for a bigger position. Weaker, diverging volume? That's a clear signal to be cautious and risk a little less.
So if there's one single thing you take away from all this, let it be this. Volume is the fuel that powers market trends. A beautiful chart pattern with no volume behind it is like an engine with an empty gas tank. It looks great, but it's not going anywhere. OBV is your fuel gauge.
So the next time you pull up a chart, don't just look at the price. Turn on the on-balance volume indicator and ask yourself, what is the real story here? By seeing the conviction, or the lack of it, behind the price moves, you're no longer just reacting to the market. You're starting to anticipate it. And that, my friends, changes everything.